This is Business Incorporated. Thank you for joining us. I'm Chimeze Obi Iwago. On the show today, Uganda government to review controversial social media taxes. Sierra Leone president targets banks in anti-corruption push. Plus, Kenya says Nairobi-Mombasa refined products pipeline ready for use. Let's get the show started now. We're starting off with the markets. And here in Africa, markets looked subdued at intraday. But for South Africa's JSE index, which was trading marginally up, others, NSE and Egypt, were down 0.09% and 0.06% each. Kenya was also down on Wednesday. In the Middle East, it was a sea of red also for all the markets we track on the show. At intraday, Saudi was leading losses down 0.55%, Qatar down 0.39%, Dubai down 0.28%, and Abu Dhabi down 0.10%. Let's move on now to Europe, where stocks were slightly higher in early trade as investors consolidated steep losses from the previous session when heightened fears of an escalation to the U.S.-China trade war soared sentiment. Let's cross over now to Frankfurt Stock Exchange for more from the markets. And my colleague Lars Alta is standing by. Hello, Lars. Good afternoon.
Hello, Jimmy. Good afternoon to you.
Right. Now, foreign investment in the U.S. was down over 30% last year, and that's according to some new numbers coming out today. Now, is that all due to Donald Trump's trade policies, and do you expect this trend to continue?
I think the trend is going to continue, at least under this administration. However, this is not specifically only Donald Trump and his policies. It's really other people behind him as well. I just want to read a quote to you by his trade advisor, Peter Navarro, who's talking about foreign investment as a conquest by purchase. So he's using a decidedly military term. That is to express, of course, how much he dislikes Chinese or other foreign investments in the United States. However, what do companies do? Of course, they need the United States. It's a way too big a market to ignore. You have to be present there in some shape or form. So, of course, international companies will produce in the U.S. They will still go there and invest there. And maybe for all we know about the current ongoing trade war, some companies might invest in the United States right now to prevent paying tariffs for later bringing their goods in. Of course, that would only cover products that they're also selling inside the U.S. If they want to export anything, there's going to be counter tariffs. So the trade war, of course, makes this entire thing with foreign investments ever much more complicated. Definitely for the near future, I think this downward trend is probably going on.
All right, let's move from the trade war to bidding war. I'm talking about the battle for ownership for British television group Sky. Comcast has increased its offer for Sky to $34 billion, topping 21st Century Fox. Who wins this battle, and what would that mean for the industry and the company?
Who wins? I don't know. This has been the second round now. Comcast was in, and Fox came with the next bid, and Comcast came with an even higher bid. But of course, Fox behind that is, of course, Rupert Murdoch. He has a lot of money. He wants Sky because he already owns about a third of the company. So I would assume that today or tomorrow we're going to get the next bid and getting into the next round of that bidding war, of course. What it means generally, of course, for the media industry, we have a problem here we've had for many years, and that is, of course, more and more media companies being just owned by one big corporation. That is a very unhealthy trend, of course, and we just see that continuing.
We'll continue to keep a tab on that story and see what comes out of it. Let's look at another development today, and that's the Deutsche Börse, where you are standing right now, being under investigation by European regulators. What's going on?
Well, European regulators are saying that Deutsche Börse and other bourses in Europe are selling their data at a too steep price. That is tightly regulated. Of course, in a world driven by data, data has a value. Data is gathered and sold. But there's strict regulation on stock market data has to be sold at a fair price. Now, what is fair? Of course, that's a question I guess nobody can answer for sure. But it seems to be a fact that Deutsche Börse, specifically where I'm standing, has lowered their data prices for private clients, but they have raised it somewhat drastically for some corporate clients. Now, the corporate clients, of course, are banks. They're algorithm traders. They're high-frequency traders. And it's interesting, though, because Deutsche Börse says they're only charging them a couple of thousand euro a month for a license for an entire trading company or bank. Now, in the world of high finance, of course, that doesn't sound like too much money. Of course, we don't know what the European Commission thinks is a fair price, and it also depends on whether the bourses here are selling raw data or whether they analyze that data, because then they can, of course, charge a premium for their services. So the investigation is ongoing, and we'll just have to wait and see what the decision will be.
Sure, Lars, we'll sure wait and see. That's an interesting story we would like to follow up. And so I guess we'll continue to keep a tab on that. Thank you very much for your time, Lars.
Thank you.